Hello traders, it's October 9th, it's a Sunday, and we have, it's 11:51 a.m. Eastern Time. What you can see here is the economic calendar. Last week we had a bit of a lot of volatility, especially coming in on Thursday into Friday. We had jobless claims that came in higher, that affected the interest rate expectations for November, making the 50 basis points more probabilistic than a 75. But then on Friday we had non-farm payrolls. This is another binary event that introduced that came in even better than expected. Okay, the unemployment rate came in at 3.5 versus 3.7, and that kind of sold the market off because the rates that was expected to be 50 basis points has now inch skewed from the 50 to 75, and even possibly introducing 100 basis point probability. So next week, tomorrow, Monday, is a Canadian stat holiday. Statistically, Canadian stat holidays, U.S. equities rally, so I'm expecting Monday to be a bullish day, but not the magnitude is going to be unknown, and I think it's going to be capped under the 6-day moving average for the S&P futures and the Nasdaq. I don't even think the Nasdaq has enough momentum because of the uncertainty to even actually test the 6-day. I think it'll just come close to it and not even touch it, but I'm just assuming that the 6-day moving average will be the cap. Okay, that will be strong resistance. Tuesday we have Fed 5-year expectations, so inflation rate expectations. So obviously their fiscal policies always being clear, 2% for inflation. Right now I think inflation is up like somewhere in the 8%. Then we have FOMC minutes. So Wednesday, I don't think I will be. I don't know if there's a setup or something's extended. I'll try to get into a Wednesday play, but Wednesdays are pretty choppy because you got Thursday and Friday with some big hitters, binary events that could make a 2 to 3 standard deviation move. So we're talking about like S&P dropping or moving higher by 2 to 3%. Okay, so. The big ticket trade for this week is Thursday. So Wednesday, FOMC minutes, the big ticket trade is just to see if how the market reacts at 2 p.m. And then after 2 p.m. the FOMC minutes releases. Basically, you got another 2 hours to figure out what this core CPI is going to be, and how you're going to know you're not. Basically, what I've been seeing in the S&P SPX 0 DT options that will expire on Thursday. In these binary events, those the SPX option chain, if you buy something at around $400, they've been moving from $400 or $200. They've been moving from 200 to maybe like 10 to 20x on a 2.5 plus or minus move in the S&P. Okay, so picking if it sells off on Wednesday into the close, I'll be looking. Well, basically, I'll be opening up 2 positions to have an unbiased trade going into Thursday in anticipation of a core CPI binary event, and this is going to be a pretty big one. So, and I think there's even a chance that both the calls and the puts could work out, but if in case that's very optimistic. But in the more realistic case, one of the legs will work, either the puts or the calls. And if you risk 200 and you get a 2.5% move plus or minus, you're going to get a 10 to 20x return on those SPX calls and puts. So that's my trading plan for this week, because I don't think the market is going to rally. There's any news unless it's company related. I don't think there's any real fundamental news that's going to cause this market to rally and make 52-week highs in the S&P. I think there's going to be a lot of chop going into after Tuesday and Wednesday. Then 2 hours after the FOMC minutes, you'll probably have a little bit more volatility to figure out which way the market's going to go, which way the market's going to anticipate the move of the CPI data that comes out on Thursday. So I think Thursday is going to be the big moving day, and then Friday will either be a follow-through day or maybe a reversal day, depending on how extended the market it gets. So last week here, the VIX actually collapsed under the 6, and then for some reason, economic data related, it ended up pushing back above the 6-day moving average and closing at like 6 or 7% on Friday, and that created that sell-off where the market rolled over after pushing up to the 21-day moving average. Okay, so we have a strategy that says if it closes above the 8, it goes to the 21. But whatever happens after the 21, it's either going to be a BLT that pushes up higher, or it's just going to roll over. So that would have been a great time to put in a binary event trade on that doji going into last week's economic data on unemployment rates. So now the market has rolled over, and you can kind of see that there's a little room for a little bounce to the 6-day moving average at 3,722, which means that the VIX is probably going to go F around a bit and pull back to the 6-day moving average at 30.2. Now, what it does here on Monday and Tuesday, if the trend continues to push the VIX higher, then that would mean that this is going to roll over into Tuesday, Wednesday, and Thursday, and create a lower low or break out above and make it to 4,000 and then roll over. Okay, so this is on a candle like this, you probably don't want to put on a strangle or a straddle. You probably want to see if you can find a doji on Wednesday going into Thursday. So if there's a doji that forms somewhere around here, then I'll be looking to put on a SPX straddle into CPI binary event. So Monday and Tuesday, obviously, we don't know which way it's going. I would probably guess it's going to go green because there's a 90% edge for when you trade into the stat holiday. But that's not a candle where I'm going to put in a huge amount of risk in, right? Because it's obviously rolling over, and it could just, I could be wrong. In the Canadian economy is, I don't know how good it's doing, but it's also following the interest rate hike path that the U.S. is taking. So if it opens and somehow closes above the 6 on Monday, then you know what? Then we got another chance of breaking out. Okay. Either way, the next doji that forms, I'm going to put on a straddle or a strangle on those SPX puts and calls to see if I can get a 10x or 40x return on a small amount of risk. Because what's actually happening, I haven't been catching a lot of these trades, but I've been monitoring a lot of the SPX. These SPX trades are moving from $2 to $40 to $50 on every 2.5% move on those zero DTEs. So looking for a doji, and then the binary event this week is the CPI. So that's the one you want to trade position into Wednesday at around 3:45 p.m. Eastern time. Okay, so 3:45 p.m. Eastern time gives you 15 minutes to figure out which strikes to position into, strangling the puts and calls or straddle. I'll figure that out on. Well, I'm going to figure out what I'm going to do in that 15-minute window, and then because of the expectations, right, the binary event being a 2.5% move, then one of those will, obviously lose 200, but the other one will turn into a $2,000 to $4,000 position, less the $200 on the opposite trade, right? So that's my plan for this week. Try to trade light on Monday and Tuesday because there's no real big mover, catalyst that's going to push the market higher. I think it's just going to chop, and then a 70-minute T-team squeeze will start to form on the S&P futures. Right now, the last 70-minute squeeze came in on Friday, which sold the market off. So now the momentum has shifted to the negative, and because it's a little bit extended, okay, we can probably see a little bit of a bounce, maybe to retest 3,700, and then just chop around there into Wednesday, and then we get a big move going into Wednesday. So, and that could end up becoming, if you look at this candle, that looks like obviously a bacon. It could just easily make another lower low here at 3,534 on Monday. I don't think that's going to happen. I think it's just going to chop and move up to 3,700 first, and then maybe sell off at the end of the day, forming a doji, right? And then Tuesday, it could sell off it could sell off, but what we just read here was just the I don't think we have on Tuesday, I don't know if this is a market moving event, right? Because everybody already knows about the 2% target inflation rate. FOMC minutes is, I think you can get like a little pump and dump into FOMC minutes, and then it dumps at 2 p.m., right? So if it pumps on Wednesday, then that's going to introduce a short-term scalp trade. And then after FOMC minutes, then I think the market will sell off, especially if the trend hits like above 1.5. Then you got 2 hours to figure out what to do on Wednesday. I'm going to be looking at the market 15 minutes before the close on Wednesday, and then straddle SPX call it put to position into a binary event where those contracts can move like 10 to 20x on a 2.5%, 2 to 2.5% move. Okay, so right now with Bitcoin, it looks like there's an A6, and that looks like a bear flag, and it's going to look pretty nasty when it breaks through that 1800 level, and then the next gap fill is going to be at 11,350. So that is a pretty nasty looking chart. S&P futures also looking like it's going to roll over, but for Wednesday I'm looking to see if I can identify a doji and then put in a strangle or straddle. Let's look at the Nasdaq. Yeah, so Nasdaq is looking like it's going to put in another low. It could happen on Monday. I don't know until the futures opens. But right now I'm flat over the weekend, and it double bottom here at 10,881. Maybe closes back in the green by the end of the day, so that would make a nice scalp, and then probably follow through into Tuesday. I'm just taking a guess because we don't have the futures open right now. Okay, so let's take a look at Apple. So Apple has a nice juicy gap here. None of the TGFs triggered, so we'll see what this does, but it could end up becoming a bullish day on Monday, right? Because it's a Canadian stat holiday. That could rally the markets up for Apple 3.86%. Adobe had pretty nasty earnings and lots of gaps open, but that looks like it's going to take a while for it to recover. AMD down 13% on earnings, and it looks like a gap fill at 50. Amazon, tons of gaps, but I think it's going to look like it's going to take out that 111 target, and then even push down and tag the psychological target of 100. Boeing looks like it's going to roll over. So Boeing has a gap here at 127, and looking like it's going to roll over and make a lower low. That's a doji where you would probably want to put in 2 contracts on the put and call side, because if it goes either way, the magnitude of the move usually ends up becoming off of a doji like this is around 5 to 6%. Coin obviously had these gaps are looking like they're acting, the ones that are trading above, they're acting like resistance. I wouldn't be surprised to see this move back up here on Monday if futures for Bitcoin are green, but that looks like a bacon, and I'm thinking that a retest of 69, closing like a doji, and the BLT down to the downside to 60 and even lower is something that Coinbase is likely to do. Yeah, Netflix was a big disappointment. The 250 gap level is acting like strong resistance, and it was unable to break through on 1, 2, 3, 4 attempts, and now it's rolling over, and I think it's just going to roll over and look to retest that $200 mark before earnings, and then my best guess is probably just gap up to like 250 and run up. Okay, Nvidia had a abysmal day on Friday, and there was a daily squeeze, a daily wolf wave, and I did load up on Nvidia on Wednesday, and the reason why I loaded up was, first of all, it was trading above the 6. There was a gap here where 139 was going to act like resistance, and I closed all my positions off at around 134.64, and then you can see what happened after that. It just, I think the information throughout the market disseminated and ended up forming this bearish daily candle, and then gapping down into the unemployment data last week on Thursday, 8%, and coupled that with the AMD. I saw the option chain expected move for Nvidia last week. It was just $2.90. It was already gapping down $5, so the gap and go to the downside was triggered. However, I was not in that trade. I've already closed off all my trade. I held on to one and it did not work. Okay, so there's a lot of trades right now that are looking to roll over, but they're gonna roll over in a bigger way after a small little bounce. These bounces that are coming on Monday and Tuesday and Wednesday, they're gonna be very small unless there's news related to the company that's very bullish. Okay, and if it is bullish and it gaps it up, then that's the trade I'm going to look for to short. Okay, if something comes up in the pre-market is gapping up 5%, I'm going to look to buy puts on that position for a scalp, a daily scalp, and then close that position with profit at any profit that comes in that I can see. If it's pulling back to the 6-day moving average, maybe I'll close off half and leave the rest to pull back to the 6-day moving average and close half, another half there, and then just accumulate enough profit so that when I decide to open up that strangle or straddle on Wednesday, I can figure out whether I want to put in look for the $2 strikes, right, on Wednesday for Thursday's expiration, and then whatever profit I make from Monday to Tuesday, then I'll position into Wednesday for that binary event. If I don't make any profit, end up flat or losing a little, then I'll just go dig into my reserves, right, and then figure out, if I want to add more than 200. Right now my base is 200 on each side, so it's the total cost will be 400. But then if Monday and Tuesday, if I scalp a couple $100 here and there on Monday and Tuesday, then I'll increase my position size using the profits from this week from $200 to maybe $400. So that'll be an $800 position on both the puts and the calls for the SPX. And the reason why I want to do that is because I want to go into the binary event with at least 2 or more contracts, because if I close off half the contract at 100%, then the remaining contracts are pretty much free, and I can kind of hold those a little longer to get maximum profit on Thursday. Okay, So I hope that helps everyone for the trading plan for this week. So Monday, a little balance. I don't think you're going to be turning $100 into $10,000 on a Monday. Tuesday, obviously if Monday is very bearish, then Tuesday we can see a turnaround Tuesday, right? And then Wednesday we got FOMC minutes, so it's going to be, with this FOMC minutes, you can easily see a pump and dump into 2 p.m. and then the market dumps like a little bit after 2 p.m., which gives us a 2-hour window. I think the 15-minute window, 15 minutes is the best time to kind of look at which strikes that you want to position into for Thursday for SPX 0 DTE, because you got the binary event that's coming on Thursday. Okay, this is a big move here. All right, so thank you very much for your time and have a great weekend.